JJ the CPA. Let's talk about the details of the Paycheck Protection Program loan that came out of the CARES Act. It is amazing, and here's why. The money that you borrow, if you use it for the intended purposes, qualified expenses, you don't pay it back. For real. Okay? Now, a couple of things. This is out of the CARES Act that just was put into law today, March 27th. A couple of things to note, some caveats. Go and listen to my other videos where I go through the details of how to get it. I go through examples. I walk through a ton of different information related to this. I'll put a link in here to the playlist where I walk through that. So one of the things to note is that when you are determining, these are going to be some key items. When you're determining your payroll over the last 12 months, which is the basis of your loan, any employees that you've paid more than $100,000 to, only $100,000 of that payroll will be included in your calculation. So I talk about that and go through examples related to that. So if you've got 4 employees and 3 of them are paid, $55,000, $75,000, $80,000, and one of them's paid $125,000, you're going to include all those wages and back out $25,000 for that one employee's amount that exceeded the $100,000 threshold. It is not an SBA loan. There are no fees related to this. And if you're looking at the massive differences as well, is that compared to just a regular loan and compared to the SBA, is that there's no collateral or personal guarantees. The only thing that really is being signed off on there is that if the business can't pay it, then the person who's signing will pay it to the extent of what is not forgiven. So the maximum maturity of the non-forgiven component, right? So if you borrow 75 grand and you only use 40,000 for the qualified expenses, then you owe $35,000. So on the non-forgiven component on any loan is 10 years, interest at 4% loan repayment, and it can be deferred at least 6 months and up to 12 months. So the one thing that I've noted on this is that if you're going to get this loan and you're concerned that maybe you're going to take out too much and you don't want to pay any interest, the deal is that you're not going to start paying interest right off the bat. Okay, your payments are going to be deferred, the interest is going to be deferred, and then if you have money left over, so to speak, well then you can just give it back. So I'm recommending just get what you qualify for and then use what you can, and then you can either just pay it back right then, or if you need it for other purposes to help keep your business rocking and rolling, well then it turns into a loan. And it's over 10 years, a 4% interest rate, which is unbelievably low. And the loan prepayment can be deferred, like I said, 6 to 12 months. Here's where there's a little bit of confusion because in the CARES Act, it talks about SBA express loans and the limits increased to from $350,000 to $1 million. Okay, that didn't have anything to do with this PPP aspect of the CARES loan. So from the standpoint of forgiveness of the loan is allowed for the total expenditures that were expended during the 8-week period that the borrower received the dollars. Let's see, just looking at notes here. When you're determining these costs, these qualified costs, and I have another video where I talk about how do you figure out how much of the loan proceeds is going to be forgiven, and it's based on the qualified expenses, which I go through. But the thing to note here is that whatever your expenses were, at whatever rate you had your expenses in place, February 15th of 2020, that's what you're gonna have. So it would be, what was your rent payment as of, basically February 15th, 2020. Now, let me be clear on this. It's just, if you had a lease in play before February 15th, that's what you're going by. You're not gonna be able to run out and sign some big lease and move into office space or prepaid loans. And it's the same thing of basically what were you already signed up for, in essence, for utilities and your rent on February 15th or prior. Okay, so what is really the goal here of the government is to avoid that new expenditures are taken on to increase the amount of the loan proceeds that were used for qualified expenses, which then would increase improperly the amount that is forgivable. Let's see. The loan forgiveness will not be considered taxable income. See my video next on that. The amount forgiven will be reduced proportionately by any reduction in the employee's retained compared to the prior year, and reduced by the reduction in pay of any employee beyond 25% of their prior year compensation. You know what? When you get your money, that's when you're going to worry about this, okay? Because this is talking about the forgiveness aspect. You want to get this loan ASAP. You get it through your bank. You don't get it at sba.gov. Just know that. Just period, the end. Don't even think different. There's no such thing as an SBA forgivable loan. Does not exist. SBA loan, you get it through the SBA, not your bank. It requires collateral, and it's not forgiven. This, no collateral, no guarantees, and you get it through the bank, lickety split, and you have the opportunity to have it forgiven. All right, so let's see, just looking through here at my notes, that if you are considering a loan and you think maybe because you've been affected by the coronavirus, COVID-19, I'm going to tell you right now, stop thinking and get this Paycheck Protection Program loan if you have employees, because that's what it's designed for. Don't count on what you've always counted on, because what we've learned is you can't count on what you've always counted on, okay? So we'll be able to maybe resume work and get back out, in the next couple of weeks. Don't just assume that you're going to be rocking and rolling as quick as you think. There's going to be other changes that come about. So what I'm just telling my clients is get the loan, get what you qualify for, and use it for whatever it is that you need to keep your business rocking and rolling. If you use it for the qualified expenses, to that extent, it's forgivable. And anything that you spend that's not a qualified expense, well, you just pay it back over 10 years, 4%, defer the payment 6 to 12 months. Kind of a no-brainer. Those SBA loans that you're going online, okay, different amounts, express, increases and all that stuff. That's where there's a minor bit of confusion because of how the language is being written about the CARES Act. And there are provisions in the CARES Act related to SBA loans, and it talks about SBA loans in the CARE Act. But this is the section basically starting at page 9 in the law, where it talks about the PPP, and that's what it is that you want to get before you get an SBA loan. You already got an SBA loan, then you're going to have to reduce down the amount that you can get for that PPP loan by the amount that you got for the SBA. And in essence, you may not even qualify because you have the SBA loan that you got because of the COVID-19 disaster. And just know this, the SBA loan that you could go and find right now on March 27th, okay, it has nothing to do with the CARES Act because it's already been in place. So that's the part that there's a lot of confusion, and falsely people are thinking that the SBA loan that they can go and get right now is this forgivable loan, and it's not. So you can tell that I'm really trying to get word out there to make sure people are in the know and getting what they think they're getting properly. So you get this through the bank. All right, hey, thanks for tuning in. I'd love it if you'd subscribe to my YouTube channel. Thank you for watching. I've got a book, JJ the CPA, here that you can find on Amazon. I take the top 60 questions of my clients over the last 27 years. And guess what? Very little of them have to do with tax. It's banking, insurance, and business setup. And really, it's how do you work with your professionals better? Okay, it's not a do-it-yourselfer. It is understanding some basics that I think a lot of the professionals that we're working with forget that we don't know. Clients come in and the questions that they've had have been very similar over the last 27 years. So I tackle these things, and what it does is it allows the person checking out this book, right? You reread it. It allows them to better work with the advisors that they currently have because they have a better basis and understanding of what that advisor does, their role, how they go about it. Anyways, I'd love it if you check it out. Thanks for tuning in, and don't you ever forget, you've never met a CPA quite like me.